A very good evening and a warm welcome to Personal Finance. I'm Kukuletu Cele. Well, what is compound interest? Why is this important to you? And just what does your first car and your retirement savings have to do with it? Niel Fourie from the Actuarial Society of South Africa joins me now from Cape Town for more. Niel, good to have you with us on the show today. Maybe let's start off with the technical definition of compound interest. If you water it down for the layman like you and I in the street, what exactly does it mean?
So compound interest is basically interest on interest. So it's the growth that you get on top of the growth that you already get. And so that compounds over years and years and actually becomes quite a significant amount. And you've probably heard people referring to compound interest as the eighth wonder of the world.
Indeed, it is the eighth wonder of the world, but the use of compound interest and the wonders that this can do for your saving, and in particular retirement saving, how do these two things coordinate?
Yeah, so it's great when compound interest works in your favor. So if you save for retirement, you put away a little bit every month and it compounds over your working life. But actually it can also work against you if you take on debt.
But let's get into the key issue here, because another method of taking on debt is actually purchasing your first vehicle. Where do young people often go wrong? Let's use the average 25-year-old who's started full-time employment and is keen now to make their move from public transport or relying on others for transport to actually purchasing their first vehicle. What are the typical mistakes?
Yeah, so typically you get your first salary, you see it's quite a nice amount. You actually, most 25-year-olds are only looking after themselves, so they don't have other family expenses they need to cover. So typically they'll go for the more expensive car and they'll actually pay a large portion of their salary towards getting that nice car and showing off when they go out at night.
So for the 25-year-old, are there particular examples that you can make use of here? What car should they be considering versus the expensive option?
Yeah, so typically a nice flashy type GTR will probably cost you around 450,000 Rand, where a more practical like Toyota Corolla or something will probably cost you around 200,000 Rand. And the thing is, in life, if you first start with a nice car, the chances of downgrading is actually quite slim. So if up until retirement you replace your car every 5 years, you would actually pay away about 9 million Rand in car installments. And if you actually went for the cheaper model, you would actually have saved 5.3 million towards your retirement. So at the end, you would actually be much better off financially if you opted to go for the cheaper car.
Neil, let's go back to the maths here. You're quoting significant numbers, which obviously do add up in the greater scheme of things. But let's use that Toyota Corolla as the example, 200,000 Rand odd. Basically, if you purchase a vehicle of that particular caliber, are you saying that basically the amount of money that you'll have at the end of the month is maybe additional funding that you could use into contributing to your retirement versus paying off the vehicle?
Yes, no, definitely. So for instance, a car that costs you 450, you'll pay about 10,000 installments per month. And a car that costs you about 200,000, you'll pay about 4,500 Rand a month. So the difference of 5.5, if you invest it on a monthly basis, it will add up to a significant sum when you get to retirement.
Let's talk about that sum, because that's where we obviously alluded to compound interest earlier on, that eighth wonder of the world. If you had to save your money, the compound effect once you reach retirement age, around about 65, how significant would it be?
Yes. So if you were to invest that 5,500 every month, and that increases with inflation, you'll have 5.3 million in today's terms when you get to retirement. So, and that will go a long way in funding your retirement.
5.3 million, a big number that you've just quoted there. But I want us to go back to some of the additional considerations that the average 25-year-old who's watching the show tonight needs to think about. We recently heard in the finance speech, in the minister's budget speech this year, that fuel levies will be going up. Petrol prices have also gone up in conjunction. Are these costs variables that obviously impact one's decision when it comes to purchasing a car?
No, definitely. So the more expensive your car will be, most likely your insurance will be more, your maintenance will be more, and a bigger engine usually uses more fuel, so you'll also pay more on fuel expenses. So I would say one of the key pieces of advice that I can give to young people, and I was in that same situation, I actually saved up and bought my first car cash, and I've been driving it for about 10 years now. And I'll probably upgrade now again with buying the next car cash. So that's probably the best thing you can do, is to buy your first car cash. And that's what they always say is the best car you can get is the one that's already paid off.
Gosh, you certainly are leading the pack then, and many people might be naysayers and actually say to you that what about the maintenance costs of having that vehicle, and why not just buy a vehicle that you can update and maintain over what, every 5 years or so? For the naysayers out there, your response?
I would just tell them, go do the numbers, and then we'll see again, then we can talk again.
Added to the numbers is interest rates, obviously, which change and fluctuate all the time. How significant is this, and is there a way to maybe keep your interest rate stable for an extended period of time, or is it best to have it linked with what happens with the repo rate?
No, I would usually go for linking the interest rate, because you pay quite a bit of a premium to fix the interest rate. So rather go with the market on that.
And for the average 25-year-old, are the interest rates that they receive highly dependent on their risk profile or credit history?
Yes, yeah, no, that can actually fluctuate a lot, and that's got to do with your earnings, your credit history, and all those type of things. But it can range anything from, say, 10% up to 20%, so it can vary quite significantly.
Are there ways of ensuring that you get the best interest rate you can get on your vehicle financing?
I would say, like everything in life, shop around, go to various places and see where you can get the best deal. Speak to your bank, speak to the car dealer, and see where you can get the best interest rate.
And the all-important insurance. We know that the majority of South Africans who own vehicles actually don't have insurance, but I take it is a significant consideration to take into place. For 25-year-olds, we know that they're right up there on the list of those who pay the highest premiums.
Yeah, no, that's definitely the case, and especially if you've got a flashy car, they know a young person will probably push the car to its limits. So if you drive a red GTI, then you'll pay a very significant insurance premium for that.
Exactly. Maybe let's get some, just to close off with some significant highlights and key takeaway points here now, and that's where we turn our attention onto Note to Self for significant highlights from the show. Time now for our Notes to Self section of the show. Niel, basically this is where we get an overview of what viewers need to take away from tonight's discussion. So for the 25-year-old, the 5 key considerations that they need to take into account regarding their first vehicle purchase and how it could impact on their retirement. Walk us through the important steps that you think that they should abide to.
So the first thing I would say is try to buy your first car cash if possible. The second thing is rather go for something a bit more practical than going for the flashy car. The third thing is shop around, try to get the best interest rate that you can. The fourth thing is maybe you don't need to replace your car every 5 years, maybe we replace it every 10 years. And the final thing, remember that they say 30% of all millionaires buy second-hand cars, so you don't necessarily need to buy a new car.
So not everything needs to come in expensive packaging for it to be useful. I want to follow up on the first point that you mentioned, which is buying a car cash. Now, for the average 25-year-old, a vehicle, basically the prices start from 100,000 Rand up nowadays. Are there particular ideal savings vehicles that they could make use of in order to make sure that they get a significant return on the savings to be able to buy that car cash?
The thing is, because it will be a short-term saving, so equities will probably be a bit volatile. So you'll most likely look for a type of a fixed deposit or a money market type of investment. You can actually save for the short-term purpose of buying a car.
And now with the recent announcement of tax-free savings accounts, would that also be a good way to look at potential savings vehicles?
Yeah, that's also something that you can consider, definitely, because your returns will be tax-free and you'll be able to withdraw money without any penalties. That would be a great option to look at.
Niel, thank you so much for your time today and sharing your insights with us. Much, much appreciated. We heard it from the man himself. They're telling us to purchase your vehicle cash if you can, and maybe not upgrade as often as every 5 years. And as well, maybe second-hand or pre-owned is the way to go. So for you 25-year-olds, we look forward to hearing from you. A big thank you once again goes out to Niel Fourie. He's the Public Policy Actuary at the Actuarial Society of South Africa. Now, do remember that we want to hear from you, so share your insights with us. You can tweet any of your comments to @CNBC Africa using the hashtag Finance410 or to myself @Gukumfupi on Twitter. Until next time, it's goodbye for now.